Today, well, world leaders have all converged on Pittsburgh, PA, poised to crack down on all kinds of things, executive compensation, climate change is on the docket. But most importantly, how do they coordinate instead of going it alone? Hans Nichols with this report.
President Obama and other world leaders have arrived here in Pittsburgh tonight, and the issues are beginning to crystallize as well as the differences. Those negotiators were up until 1 o'clock last night talking about like IMF quota reforms, bank capital requirements, and of course just the general state of the global economy. Earlier, Secretary Tim Geithner spoke to reporters. He said there are signs that the global economy is improving.
We're beginning to see growth in the United States, and around the world we see exports rising, and forecasts for growth are being revised upwards.
Now, the crisis has had some positive impact, Geithner said. Positive impact might be the wrong word, but he said that it has forced changes by the American consumer to save a little more.
For too long, Americans were buying too much and saving too little, and that's no longer an option for us or for the rest of the world.
That higher savings rates for America might not be good news for China, which of course has an export-driven economy, but the Americans and the Chinese are in agreement, along with the Russians and the Brazilians, that those countries should get more in terms of IMF voting rights and also have a greater say in World Bank governance. Now, of course, who doesn't agree with that? The Europeans. They don't want to cede any power to these developing countries, these emerging economies. What Secretary Geithner told us was that the Europeans are just there in a difference of increments, not fundamental differences. The Europeans will go ahead and come closer to the American position. There will be an increase in World Bank governance and IMF quotas for Russia, China, and Brazil. From the G-20 in Pittsburgh, I'm Hans Nichols.
And like you were wondering, no, we were not having a freak-out session or problems in the control room with all that shouting. That was actually the protesters around the perimeter of where our correspondent Hans was reporting. As a matter of fact, they faced off against the Pittsburgh Metropolitan Police. Police actually had to deploy tear gas to fend off the anti-globalizationalists, if that's the term. Luca from Natixis, where he's Chief Asia-Pacific Economist, rejoins us on the program today. Do you care about the G20? We've been talking about it for days, like something as magical is going to happen, like we're going to have some kind of an epiphany out of this meeting.
Nothing magical is going to happen as usual. It's somewhat interesting that leaders meet. It gives us signal. But apart from signaling stuff, I don't think that there could be some major breakouts in something that in a situation that is still complex. I don't think there is any possibility. I've read this morning this news about economic coordination, economic policy coordination. I mean, situations are so different, and also stages of developments are so different that it's impossible to have an agreement on economic policy coordination. What does it mean? I still don't get it.
So why do people talk as if, you know, they can actually come up with some sort of broad targets for climate change and, you know, enhance coordination when it comes to regulatory reform, so you don't have, you know, loose money, loose cannons running all over the place? It's
their job to talk about this, right? So they're doing their best. They know perfectly well that as globalization has gone to this extent, they cannot help their country by themselves. So they need to have a coordination, but this coordination is just impossible to get it. So it's just their job, and they're trying to this is why it's important that they meet. At least they meet.
There's actually quite a delinkage, isn't there? Because I mean, if everybody was in the same collective boat, you know, having the exact same problems replicated from place to place, that would be one thing. But you've got a very different situation in America than you have in China. You have a very different situation in China than you have in Australia. Look what's going on in Australia. It's boom times again in that country. I mean, the consumer is out. They're getting ready to raise rates. Some economies have been raising rates when others, you know, still have deflation pressures. It's not in their self-interest, is it, to actually outsource any policy initiatives to somebody on the outside?
I mean, forget Australia. Let's look here, Hong Kong.
Sure.
Okay? So you have a policy coordination, a forced policy coordination between the U.S. and Hong Kong because of this currency board. So the interest rate in Hong Kong must be equal to the interest rate in the U.S. because the two currencies are linked. So what is happening to Hong Kong? Hong Kong is booming again. Real estate is booming, although it was already in a bubble before. The weakness in real estate maybe lasted for 3 or 4 months. So there is way too much liquidity in Hong Kong, and this liquidity cannot be drawn out of the system until the US is doing something with its liquidity situation. So coordination also at the level of Hong Kong, which is a small open economy, and the US, which is the largest economy of the world, just don't work. So coordination is the only way they can go, because they cannot do something by themselves, but it's still an impossible task to reach.
What do you see going on around you today? We've had quite a momentous week, haven't we? We've had very aggressive fundraising exercises by a number of companies that started to fizzle out a little bit. People are getting a little bit of malaise. Perhaps they're feeling a little bit, lethargic after that big run there. Is that did this breakout that we were hoping for, that was going to lead us into the next rung of the recovery, is that done, paid to, all but over with?
No, it's not done. I think if you refer to the market, to stock markets, I think what we have been seeing till now is a correction on the holdings of stocks by financial institutions, mostly hedge funds and banks, which sold too much and too aggressively between fourth quarter of 2008 and the first quarter of this year. So what you're seeing now is a market that is dominated by financial institutions. What you're not seeing now, in my opinion, is a market in which the private non-financial sector is in, which is in some way a good thing, because the private non-financial sector must give a hand to buy government bonds. The issuance, gross issuance this year would be amazing of sovereign bonds.
Wait a minute. So the financials are leading the way once again, you're saying, when we haven't learned the ways of the past?
They have led, but they're going to stop. And I think this is why we're going to see market going sideways. And this is why you have IPOs right now, because it's the last moment of the big push up and the normalization of prices. Yeah.